Hey, everybody, welcome to this session. I hope everybody is having an awesome start to WorkflowCon 2025. I have to say that this is my second year presenting at WorkflowCon. Last year, I was nervous. This year, I am just so excited because I know what people WorkflowCon brings, and it's just so great to see. And I know I'm just seeing your names because we don't have all the videos on, but I scrolled through the names of who's in the session, and it was so nice to see so many familiar names. So I'm so glad to see you. If we've not met before, this is the moment. So if you are looking for the session called Standardization and KPIs for Firm Success, you are in the right place. If you are not in the right place, this is your moment to duck out honorably and go find the session you are looking for. But this one is going to be great. So I encourage you to stay. Okay. If we have not met yet, I'm Erica Goode. Here's a little background about me, just so you know who is this lady whose financial sense has asked to speak. I started my career, I'm a CPA by trade. I would call myself a fractional CFO, bookkeeper now. I started my career in Big Four in audit at KPMG out of the Chicago office. If there's anybody from that time and era, I started off there. I made the jump after 2 or 3 years to go to corporate accounting at Walgreens headquarters in the northern suburbs of Chicago. Spent about 7 years there, jumping around different finance and accounting roles, and eventually left to be a stay-at-home mom. I did not leave to start an accounting firm. I left to be a stay-at-home mom voluntarily on good terms. It was just hard to juggle life and parenthood and work. And I made the conscious choice, my husband and I, to one of us was going to stay home. So that was me. I did that for 2 years of stay-at-home mommingness and eventually accidentally, I know some of us accidentally start accounting firms. That was me. I accidentally started an accounting firm, bookkeeping in QuickBooks with a local business, and slowly grew, slowly and steadily. And here I am 8 years later. I think I'm 8 years in now. So I run an almost solo firm. I just to give it context, this is not a brag. I don't think this is something people brag about. I'm small at $200,000 about revenue and profit. When you do some rounding down and rounding up in either direction, there is only one employee. It is me. I do have a part-time contractor, and I only work 15 hours per week. My contractor only works 10 hours a week. We are a micro fractional accounting firm in every sense of the word. I have about 10 to 12 clients. I only do bookkeeping to fractional CFO work. I don't do any tax prep. I have in the past. I don't currently do that. I'm capable. I just choose not to at this point. At home, I have 2 kiddos. They are the reason I have made almost every career choice that I have since 2011. I've noticed when I don't make choices in my career that don't involve them, it tends to go badly for me. So they are my everything, and they are what I do everything for, and how I structure everything is so that I can be the parent I want to be. I have a husband. He is also a CPA. We actually met at KPMG, fell in love and got married, as accounting love stories happen. And we have a whole menagerie of sweet animals. I have a dog who is sleeping through this talk right now in the corner at my office couch, and we have a whole bunch of chickens out here in Idaho, where we moved about 6 years ago from Chicago. So if you want to connect, I hang out a lot on LinkedIn. That's pretty much the only place I hang out. I say a lot of things there. I try to make some jokes at my own expense, so you can follow me there. I also write a newsletter on Wednesdays. It just went out this morning. I'll have a link to that at the end. And I also run a community platform called Aligned Accountants. If you've heard of it, it is a whole bunch of firm owners like me. I was shocked to understand that there is more than just me running this fractional micro, trying to juggle all the things in parenting life. So we hang out in Aligned Accountants. And this is a picture of me outside. I just absolutely adore being outside. It is my happy place. The family asked me what I wanted to do for Mother's Day this past May, and I said, just be outside. And so this is a picture of us hiking in City of Rocks, Idaho. If you are into mountain climbing or rock climbing, that we are not like we can do some in a gym, but we're not crazy rock climbers. I would highly recommend City of Rocks in southern Idaho. Okay, I told you a whole bunch about me. Let's ask some questions. I want to see who's in this room. So I have some polls set up. Let me throw these out here. Go ahead and answer. How long have you been in business? How long have you owned your firm? Um, less than a year, 1 to 3 years, 3 to 5 years, 5+ years. Okay, I love these live results. And it looks like I think you can actually answer all these questions before I even throw them up. But okay, it looks like at least half of you are 5+ year firm owners. That is great. You are in good company. I think I've been at this for 7 or 8 years, like I said, and everybody else looks like they're in the less than 5-year mark, which is great. I did not have the opportunity to go to a virtual conference that early in my firm ownership. So that is amazing that this is an option now. Okay, let's see. Our next question is, what's your firm's main service offering? And I know many of us have um, lots of different offerings, but if you had to choose one or a main one, or what you would tell people about what you do, would it be tax prep, CAS? And I know that can mean a lot of things: accounting, payroll. Is it bookkeeping? Is it fractional controllership or CFO? Looks like we have lots of bookkeeping. I know and love that well. That is how I got started. Um, so it's great to see almost half of us bookkeeping, then a quarter of us in tax prep and advising, CAS and fractional CFO as well. Okay, one more. How many employees or contractors are in your firm? Just me plus one, 3 to 5, 5+. Okay, we have lots of just me's. I love that. I think that is absolutely can be a wildly successful business model. I know I felt very like, I don't know if embarrassed was the right word. I felt like small and not the same as everybody else when I first started out here, because I wasn't growing to a huge team. And it is absolutely a business model that can be wildly successful. So the just me's, you are in good company. And then it looks like we have a lot of people spread across the me's plus one and 3 to 5 employees and 5+. Okay, I love this. I love the types of firm owners that WorkflowCon brings together. So thank you for being here. Today, what we're going to talk through on the agenda, I know we have 50 minutes. We are going to talk through success. So the name of the game was, we were going to talk about standardization and workflow, but it said for firm success. So first we're going to talk about success. We're going to talk about defining KPIs, key performance indicators. We're going to talk about my favorite KPI in my business, and then talk about building a KPI into your workflow. And I will try and save at least 15 to 10 minutes of Q&A at the very end. So you are welcome to drop questions into the Q&A. I'm sure you guys are this is old hat now. There's a little bar where you can put Q&A in. Go ahead and utilize that. If I don't get to the questions while I'm presenting, we'll have time for that afterwards. And there's that awesome upvote feature in there. I don't know if you've seen that, but you can, if you see a question that somebody else has asked and you want me to answer that, if you upvote that, it helps me filter what people want to hear about. So go ahead and utilize that. Okay, we're going to talk about KPIs and workflows, but before we do that, we're going to talk about success, because the name of the session is KPIs and workflow standardization for firm success, right? Everything we do is for success, but we can't build the workflows until we define what those KPIs are, and we can't define those KPIs until we decide what success is. So I want to spend some time about success specifically, because I think this is a word that gets thrown around and can mean very different things to different people. So I think each person here, including myself, has to ask themselves this: what is success for me? What is that for me? Because it's going to be somebody different. We have so many people. I think I saw we had 300 people in this room. There could very well be 50 versions of success in this room. And we have to be careful that we're not trying to chase after somebody else's version of success. And we need to define what that word means for you specifically, for me specifically. Like I said, I live in Idaho, and I'm not from here originally. We live in my husband's hometown. I'm from Chicago. We live in a rural agricultural community. And what I've learned is that small towns have a dialect. Like, right? Everybody speaks English here, but their English can be a little different than Chicago English. And they they use this phrase here, clear over there. Like, somebody is clear over there. Only clear over there can mean many different things. Like, if somebody is, hey, he lives clear over Tin Cup Road. It's not actually a road, that's just what people call it. He lives clear up Tin Cup. That's almost in Wyoming. That's almost in a whole nother state. Or if you're a track and field coach, my daughter runs track and field, she could be clear on the other side of the track, which is only 50 yards away. Or if somebody leaves their gate open for their horse pasture, their horse gets out and it's clear over on the Harris Ranch, right? That might be a half mile away. And so everybody uses this word clear over there in this town, and it means very different things depending who you talk to and depending how they're using it. And so I think it's really similar to the word success when we throw this around in corporate and professional usage. What I'm saying is successful might not be what you're saying is successful. And here's a good example. Somebody's version of success in an accounting firm might be growing their firm to $1 million. Absolutely nothing wrong with that. That is their version of success. Somebody else's version of success might be maxing out my 401k and taking Fridays off. If they're able to do that, they will declare their accounting firm successful. And so I want us to think through what success is. And it's not until we think through that for ourselves, only after we ask ourselves, what is success for me, can we then start defining what should our KPIs be for our accounting firm. And so if you were thinking that this session was going to be, here are all of the perfect accounting firms that everybody on this session needs to use so that we're all on the same page, I'm so sorry, that is not what it's going to be, because your KPIs are going to be different than my KPIs, are going to be different than somebody else in this room, in this virtual room's KPIs. And I'm going to walk us through a couple of examples here of when we have different versions of success, what do our KPIs maybe look like differently? So here is an example. This person's version of a success is, I want to replace my W-2 income within 1 year of starting my firm while working less than 45 hours per week. That sounds great. that sounds like a great version of success. I would think that particular accounting firm owner is going to look at monthly profit because it sounds like income is important to them. I think they should monitor how many hours per week they work because clearly they've defined a number of hours that they want to work under. So that is a metric that we want to watch. And then it sounds like growing to that space within a year is important. So the speed of that and getting to that place of revenue is important for this firm owner. I would look at things that are going to drive marketing and drive new business, like number of networking events that they're attending, number of emails sent to their network, and number of discovery calls booked. Those would be kind of a whole tranche of KPIs that would align with that person's version of success, which is going to look different than somebody whose version of success is, I want to sell my firm for $2 million to a larger firm. This is not everybody's version of success, but it might be somebody's. And the KPIs that we just looked at for the person who wanted to work 45 hours a week and cover their W-2 from their prior job, they're going to have different things they want to monitor if their goal is for 2 million and an exit strategy. They're going to be looking at things like monthly revenue, MRR, monthly recurring revenue, annual recurring revenue. Those are things that are important when you're valuing, especially an accounting firm. You're going to look at MRR as a percentage of total revenue. You're likely going to have a growing team and you care very much how much can those team members complete in revenue, like how much business can those employees attain in their amount of work. So revenue per employee, or LER, like a labor efficiency ratio, and percent of clients on a standard workflow. All of those things are going to help you sell at a higher value. So these would be a bucket of KPIs that a person who wants to sell their firm for a high value, maybe in a short amount of time, is going to want to monitor so that they can get there as fast as they can to get to their version of success. Okay, and lastly, I'm putting my own up here. I'm calling myself out. Here's my version of success. This is kind of what I judge against, and we'll talk about this later, but I'll give you a baseline. After tax take-home pay is at least half of my family's expenses while I work less than 15 hours per week. And so for me, this is how I've defined what success would look like in my accounting firm, right? I want to contribute to my family's expenses, at least half. My husband also works. He can cover half. It will make me feel like I've covered us. And also, I don't have the capacity to work a 40-hour week. As if you are a parent, you know those kids get sick. They have days off of school. They have doctor's appointments. They have events that do schools pretend like parents don't work? I love it when they're like, hey, there's an assembly at 10:37 today. Like, dude, does nobody, we'll just drop everything and we'll show up at 10:37. And so in this season of life, I can't work 40 hours a week. I tried, it is a struggle for that in a traditional work sense. So my KPIs look a lot like my monthly profit because take home pay is still important to me, but more so my hours of work per week. I track that on a weekly basis and a monthly basis. And profit per client per hour, which I'm going to breeze by because I'll give you a spoiler. That's my favorite one. I'm going to go in depth in that in a little bit. And then for my marketing metrics, I personally track podcast downloads, newsletters sent to my prospective clients. And I am not necessarily, this is not a marketing presentation. I'm not telling you that podcasting and newsletters are the way to gain clients. Absolutely not. It is just what I have done in my business and something that I track just to see how those are performing. And then lastly, this has absolutely nothing to do with my success. I just can't track my CPEs unless I put it as part of a workflow, which we'll talk about. And so I jam my CPE tracking into my KPIs so that I don't forget to do them and track them. So that is actually one of the KPIs that I keep a pulse on every month. Every week I'm tracking those so I don't lose track of them. Okay, as I alluded to before, my favorite KPI is called, and if you've never heard anybody talk about this, it's because I'm pretty sure I made it up. It's called profit per client per hour. And what this is made up of is basically how much do I make for every hour I work? And so the way I see this is it is the client revenue, how much revenue for a particular client comes in. Um, and I subtract out any costs that would associate to me serving that client. So that wouldn't necessarily be something like my email, like I on Google Workspace. It wouldn't necessarily be that. It would be the software that is specific to that client. Or if I have a contractor that helps me with bookkeeping, it would be a portion of that person's time and costs that I spend for that person. And so it'd be basically the profit of that client for a month divided by how many hours spent on a client for that month. And for me, because it is so important about how like I said, I don't have a lot of time to work. I don't have the luxury. This is a luxury to work 40 hours, 50 hours a week. I can only work 15 hours. And so when I can work, I need to get some bang for my buck, right? Like I need those hours to that I work to really bring home high profitability so that I'm not spinning my wheels over a few dollars here and there when I do work, right? Like we are in a profession that is able to make a high profit for the hours we work. If we weren't, we would be comparable to an hourly job that anybody can get. But we have this great knowledge base that has a lot of value to people, and so I want to make sure that that is. I want to make sure that that is something I'm keeping a pulse on because if I see that slipping, then something's off. So here is the breakdown of what all that entails. If you want to use this in your business, if having highly profitable hours of work is important to you, swipe this, take this, use it in your business. Um, to get the revenue, it's pretty easy. It's what you bill your client. If you're fixed fee or if you're hourly billing, you could do it either way. You could calculate it using either one. Software costs, I would include things like your general ledger software. If you have a if you have a software that's on a per client basis, like Double or Keeper, if you have something like a reporting software like Fathom or Reach, I would account for that in the profitability of that client. And then same thing like outsourcing. If you have an additional resource, like a human resource that you're using to support that client, I would take a fraction of that cost and assess it to that client. And then obviously the huge denominator here is tracking your hours. I am not a huge fan of billing hourly. But I am a huge fan of tracking hours. And I think you can track hours internally for internal management purposes without using it as a punishment for people or pointing of fingers to staff. I think it just helps to understand how much time a particular client takes you um, when you complete their work. And so you can do this. I know Financial Sense has a function to track on a per client basis for time spent. That is absolutely a way you can track that. I track mine in Excel. I think there are some fancy apps that you can use as well. But just any way that you track any kind of time, I think is helpful in general. And it would be what you would use for your denominator here in this metric. Okay, so this is my favorite KPI. I want to, before I go to the next slide, if you didn't skip ahead, I'm going to talk you through a real life case scenario in my own practice. And this feels very close to home. This is something that happened this year in 2025. And so I come to you with some humility, and it actually really helped when Kenji was presenting this morning and he talked about growing fast and cash flow issues. I felt so good that I wasn't going to be the only person talking about something that felt embarrassing to me in my firm. And so I'm going to walk you through this scenario of what happened. And I have a lot of graphs. So what I have here is my favorite. Okay, this is actually revenue. I know it's kind of got cut off here. So for revenue, this is what I track. This is part of my KPIs. I'm tracking my revenue every month. This is in my reporting software. And as you can see, the green line is this year. The gray line is where I had hoped to be. So I started off the year better than I had hoped. And by April, there was a whole bunch of tariff fear. There was a whole bunch of economic fear. And actually, with my clients, that had started back in November, December. Pipeline started to dry up as uncertainty started to develop in the business B2B arena. And so, one of the struggles with being a fractional CFO is your clients have an immense amount of information about how the future of their business is going to go. And so they're highly educated. You are telling them how their business is not just doing, but how you predict it's going to be. And so by April, I had a perfect storm, I would say, of clients downgrading services due to cash flow issues, clients closing their offices, closing their businesses because they were going to pursue other options, and clients looking for cheaper solutions, cheaper than I was willing to do the work for. And so, as you can see, the wheels started to fall off in April. And when we talk about clearing the chaos, I felt like April of 2025 was chaos for me, and it had nothing to do with tax season. It felt like a whole bunch of stuff hitting the fan for my clients and it trickling down to me as a business owner, as a firm owner as well. And so we stabilized in the summer, but this did not feel good. This did not feel calm. And this is real life firm ownership where you're like, okay, this is happening. And I'll say one thing, because I have a definition for success, like I know what success looks like from a financial standpoint, this was still within my version of success. Like this was still able to allow me to cover half of my household's expenses. And so while none of this felt great, this felt like the ego in me felt really bad. And the shock of it doesn't feel like emotionally this was rough. But when I go back to what my version of success was for my firm and the KPIs I had defined, I had to talk myself back into the thing that we just talked through in this session of like, but you're okay. Like, but this is still successful for you. Like, this isn't ideal. This doesn't feel great. But for what you've defined as success, that is still good. So that gives you the backdrop of my 2025. That is real life boots on the ground. And what I noticed though, so revenue, obviously profit came down. But what happened when I looked at the rest of my KPIs, the profit per client per hour was, look at this. Okay, so this is my rolling average of profit per client per hour. And what does it look like happened um, between April and as late as this past September? This metric that I'm tracking, the one that I've decided is really important to me because if I'm going to work, I want some bang for my buck because I don't have all these hours in the day to collect clients. This all of a sudden I noticed started going up. And I looked back because I have all this data that I use to get these KPIs. And I looked at the clients that were leaving and the services that were downgrading were actually some of my least profitable service lines and clients. And I love all my clients. I'm not saying anything bad about my clients. It just so happened that the clients that were leaving or downgrading or whatever, closing up, happened to be clients that were less bang for my buck when I worked. And so I got to look at this tranche of KPIs where like, yes, revenue feels like my ego hurts when I look at that graph. But then I look at this other KPI, profit per client per hour, that I've decided is really important to me, is actually going in the opposite direction. And I kind of had to take a step back and appreciate that that what I had left per se, like I still have a thriving business that I'm happy about, but what was remaining was something that I was really proud of, and I had really strong, efficient systems. And so I was able to kind of look at this holistically, and I'll breeze through here. I obviously track my hours, and I noticed that obviously my hours came down too. Normally they would start to go back up in September and October, and that's not happening. So yes, did I lose revenue that I'm trying to get back? I did. I also lost hours, which is something that's very important to me when I define what success is for me. So, um, yes, all of that in the past year is an emotional hit, but I keep coming back to my success definition. For me, this actually still feels like a successful year, even though emotionally it did not feel so great when April and May was all unwinding. Okay, KPIs only work if we define them and track them. We talked about defining them, uh, but we can define them and then forget them in a desk drawer or on a spreadsheet. They do us no good if we don't track them. That is the whole point of a performance indicator. And I find that we only track them if we make it part of a workflow. It's great if you can work it into a workflow you're already doing. It's kind of like a habit coupling. I think, gosh, who wrote Atomic Habits? James Clear, he would call this like habit coupling, right? You're already doing something. Let's just add in our workflow and add in our KPIs into that workflow. If you don't have anything where this fits, this is going to be something where you create a new workflow around this. So when you're building a workflow around your KPIs, there's a few things I want to make sure we spell out. Know your KPIs. We talked about that. I would max them out at 5. I think we can get a little KPI crazy. I don't think you need 10 or 20 of them. I think you probably have 5 things that are going to move the needle on a lot of things. Doesn't mean you can't track other things, but like there are 5 things that if you focus on and that you track, is going to have a waterfall into other areas. And then you want to add whatever step you're doing to track this KPI, you want to add it into a workflow that already exists or an SOP that already exists. And again, if you don't have one, you can create one just for this. And I'll show you where mine sits. So this is my workflow tracker. I don't use software for a workflow tracker. I will tell you the truth. I went on a shopping spree of practice management software about 2 years ago, and I searched them all. And I promise they are not paying me to say this. Financial Sense is what I would have gone with. It was just that with 12 clients in my form of business, I felt like a software was just a few yards ahead of me. And so maybe I will grow into that. But for now, I use a spreadsheet that looks just like this. I track all my clients. I removed the client names up here so that I wouldn't share any sensitive information. But I am a client on my workflow. I have my own workflow here to create my bookkeeping close for the month. And part of that is updating my KPIs and what I call my drivers of my business. And so this is absolutely part of my workflow. And for you, that might be in practice management software or a spreadsheet as well, or maybe you have an SOP. But somewhere in there, I would wiggle that KPI tracking into your workflow. So we talked about that. Oh, have a place to keep track of your KPIs. You can do this in a spreadsheet. This does not have to be fancy. You can just put this on a monthly basis, months across the columns, and then put your KPIs in the rows and just open it up once a month and add it in there. I don't think you need to overcomplicate this. I put this in my reporting software just because that's the software I'm in. So that's what this looks like for me. I'm tracking, like we said, the PCH in there. I'm tracking some lead gen drivers. And so every month as part of the workflow, this is where I'm entering the data. It doesn't take me long. Once the format is set up, once you know what you're looking for and where to grab those numbers, I can't imagine this takes me more than 5 to 10 minutes on a monthly basis. But I promise you, I would absolutely not do it if it wasn't specifically listed out in a workflow that I already was tracking along with. Okay, and most importantly, Put time on your calendars after you've done all this great work of tracking, defining these KPIs, putting them in your workflow. Like, put time on your calendar to actually act like the CEO in your firm. Because, especially as solo firm owners, I know there was about half of us who said it was just me, and a small percentage, it was just me and somebody else. Like, it's really hard to see the forest for the trees when you're constantly looking at the trees, which is absolutely what you need to do. You need to be in the details of your business if you're a solo firm owner. But every once in a while, we need to stick our heads above the clouds and look at how things are going for our firm to make sure that as we're running our firms, it's guiding us towards the definition of success that we are trying to intentionally build for not just our businesses, but our lives. So, uh, if there's two things you walk away with today, I want you to remember that success and KPIs are specific to you and you alone. And we want to be so careful that you don't accidentally start chasing somebody else's version of success. Take the time to define what this means for you. And then close the circle by making KPI tracking for your firm as part of your workflow so that you can then point back to if it's leading you towards that success that you've defined. Okay. I hope this was helpful. I would love to hang around and do a whole bunch of Q&A. I think we've got about 10, 15 minutes left. I will stay here till the very end until they kick me out. And I will go into these Q&A questions here in the chat or in the Q&A function. So make sure to get them in there and upvote if there's something specific you want me to get to, because I don't know that I'll be able to get to everything. And if this was helpful, if hearing about my firm was helpful, I write that weekly newsletter. It goes out on Wednesday mornings. That QR code will take you to a page where you can put your info in. It's absolutely free, and you can absolutely unsubscribe at any time. I just share some real life behind the scenes of small solo firm ownership in what probably is a down to earth tone, as you can imagine. So let me jump into these Q&As. Lynn asked, thank you. Thank you, Kyle. I appreciate that. Okay, what percentage of time do you estimate that you spend on non-billable time, i.e. still working on your business, but not able to be allocated to a specific client? For me, that is half the amount of time. So if I work 15 hours a week over the course of the month, half of that probably winds up being admin time. I produce a podcast that's included in there. I write a newsletter. That includes going through my email every day. That includes doing my own accounting. I'm thinking through what would be in that admin time. That'd be my own accounting and my own like CEO time. I call it a think session. I have like a half day think session every month. That would be included in there. The thing is, though, I think that admin time is fixed. So if I were to grow into a 40-hour work week, that admin time, yeah, I don't think that admin time would grow at the same rate. Like, I think I would grow into more client time. And so it wouldn't be half and half. It's just half and half at the amount I'm able to work now. And if I grew into like a 40-hour week, it would probably be a third or a quarter of the time. Good question. Okay, let's see. Shannon has a question. When everything you do is different, how can you standardize? All we do is project work. Yes, I absolutely think that if all you do is project work, and every project is different, then it is extremely hard to standardize. For me, standardization came with niching. When I was, I started like probably many of us, I was happy to take on anybody when I first started. And as you see who you like to work with, what businesses, what accounting you like to work, what do you like to research? Like, this is what we learn when we take on everybody like demonizes taking on everybody. You have to niche on day one. You do not have to niche on day one. You don't even have to niche by year two. You're probably going to get hate mail for saying that, but I think you can like see what you like and then decide, hey, it would be really easy if I had all clients like this. And that becomes an easy way to standardize. And then also, if you're doing project work, well, like, okay, what if I just start taking on projects just like this? Like if you're just doing, um, oh, you say, oh, I'm looking at Shannon's, it says payroll queen. I love that. Payroll queen, payroll restoration. Like maybe you decide that it is only uh, clients who want to move to a particular payroll platform or clients moving away from a particular payroll platform. Like there are ways I think you can standardize within that just by deciding what boundaries you set up for who you're going to work with and the kind of work you're taking on. But I don't think you have to rush to do that if you just haven't gotten there yet. There's no pressure to figure it out if you haven't figured it out yet. Okay. Darren has a question. How do you track hours spent on a client? I track this in a spreadsheet. I literally have a spreadsheet open where I am plugging in my hours, or I'm plugging in like the time I'm spending every every minute. Like I know that when I say it out loud, it sounds like a little OCD, and maybe it is, but I have a spreadsheet. It's a template. It flows into this whole tracking mechanism. Um, we have that template and aligned if that is something you're interested in, but it's just an Excel spreadsheet. And it's just a matter of like when I go into my workflow and I'm like, okay, I'm going to close this person's books. I say, okay, it's 12:22. I've started at 12:22, go in and do everything I need for 20, 30 minutes. And then I'm like, okay, it took me 30 minutes, and I write it down and I go on to my next task. For me, I'm a huge time blocker. Like I have physical blocks on my calendar to do certain tasks, and that keeps the time tracking more manageable because I'm chunking things in bigger pieces on my calendar. And I don't feel like I'm bouncing around constantly because I have such defined uh, time blocks in my day. Good question. Okay, I'm refreshing these. Okay, I'm looking at Caitlin's question. Do you track your hours on CPE or hours working on your business versus just client work? If you only work 15 hours, is that split between client work, CPEs, and working on your business? Yeah, I track everything in my business. Um, and so that would include CPE hours. Oh, okay, I'll be honest. I listen to a lot of earmark podcasts while I'm driving. I do not track the hours I'm driving while I'm listening to an earmark podcast for CPE. But if I'm at my desk, like if I'm at WorkflowCon and I'm getting CPEs, I'm going to track that. And if I'm working on my business, not in my business, I'm tracking that as well. Let's see. Somebody asked, sorry, I can't see your name here. It's blocked. What is the reporting software I use? I use Fathom. Um, I've been using it for quite some time. It's my forecasting software for fractional CFO work. And then I also use it for reporting for my fractional CFO and bookkeeping clients. Oh, this is a good one. Would you say success and KPIs change as you reach your goals? Should we be revisiting what success looks like? Yeah, I think so. Like this is such a great, I think, philosophical questions. Like I think we should always be assessing what success is because life changes and business changes. And what success looked like when you were in a season of life with a whole bunch with no kids can be different than when you have kids. Or maybe you have a family member that gets sick and they need a lot more care. I think our versions of success change based on what our life needs. And I like the idea of sitting down every year and doing this, but we also can't be like slaves to what we did and what we defined and budgets we set because life changes. Life changes more than just on January 1st. And I think we need to be flexible to be like, okay, what's happening in my life right now? And with that new information, what does success look like for me? And I love that. I am very scared for myself of when I hit a goal that I'm going to then make a higher goal for myself. I noticed this because I'm so goal obsessed and I love to hit my like I love to meet my goals. It becomes a like it becomes a curse almost. And so what I found this happening, this is a silly example, this has nothing to do with business, but I always set myself a goal in Goodreads. If you like read a lot, Goodreads tracks what books you read during the year, and you can set yourself a goal. And I kept hitting my goal, and I kept increasing my goal for how many books I was going to read every year. And then at some point I was like, I can't read this many books. Like, and I started getting stressed about like, this is so many books to read. How am I going to get through this many books every year? And I realized that like I didn't have to increase my goal. Like I liked reading. Like reading is fun. I was making reading not fun by increasing the goal. And so I think sometimes in business and life or whatever other goals you have, we just have to be careful that like we're not changing our goals for the sake of changing our goals. Like always come from a place of what is it that I actually want? What is it that's gonna get me to that happy place or to that comfortable place or clear the chaos and find your calm. Like this is so great. Like when you found your calm, you don't have to create chaos again. Like this is not like a stepping stone to continuing to find chaos and calm to pat yourself on the back. You can find calm and then just enjoy it. Okay, I think we have a couple minutes left here. How how on earth can you charge that much? I highly doubt the market where I live could stand any more than I already charge. I don't have any clients where I live. Nobody will pay what I charge in the geographic region that I exist in. Um, I actually don't. If somebody in my area needs something, I'll just do it for free because they are my friends and because I can choose to do free work if I want to. But the people who are charging $5,000 a month for fractional CFO work have $1 million companies, multi-million dollar companies, and they need something specific. And then also, I think you're getting to this. I didn't share my pricing anywhere, so unless you went on my website while we were talking, very clever. But I think you're talking about like how the profit per hour is a factor of that is how quickly I can get the work done also. Like if I can make the process more efficient, then that increases the profit per client per hour as well. So there's kind of two factors there. Pricing, yes, can't be low, but also if I can complete the task in a really efficient manner and have a really standardized system, then that increases that KPI. Okay, I think this is probably going to be our last question. What is your average client size? I offer different packages, and it really depends on what package. I have a concierge bookkeeping package that usually is anywhere between $500 and $700. Those tend to be clients of $200,000 to $500,000 in annual revenue. And then if a client was paying $5,000 a month for fractional CFO, they tend to be probably like $2 to $5 million businesses with 15 employees. So it just depends on what service they're looking for, and it really is probably backwards. What size they are matters to be what service offering they're looking for. I hope that answered your question. Okay. Well, thank you so much, everybody, for being here. I'm so glad you're at WorkflowCon. I hope you find some calm while you're here. I hope you have some takeaways of something you can do to create calm in your business and in your accounting firm. And I hope you have just the most wonderful day for the rest of WorkflowCon. Thank you so much for being here.